We wrap up our series on the Botswana bonds market with senior trader at Rand Merchant Bank, Bhagang Mabisi. In a previous episode, we talked about some prerequisites for investing in government bonds. Bhagang highlighted, amongst other things, that the client must hold an account with the bank and that the minimum amount for a retail client to invest is 10,000 pula.
A bond is a security investment whereby a company or a government borrows money from an individual or from the market and then returns it with interest over the life of the bond. And then at the end, upon maturity, they give back the principal or what the individual or market had invested.
So, if you have 10,000 pula in your account and wish to invest it in government bonds, you might want to stay tuned as Bhagang shares some tips to consider to help you with just that.
Bhagang, thank you so much for coming on First Issues once again. As ever, it's a pleasure having you on our platform. Unfortunately, we've come to the end of our series on bonds, and to wrap up, I'd love for you to share some of the economics around bonds, or tips, if you will, for those who are interested in investing in bonds.
I think probably for individuals, to make it very simple for them, the first thing you need to know when the bond you want to invest in matures. The risk profile you actually want to get into or invest in. So for example, we have like different maturity profiles across board or different tenors. We have right now 1 year, all up until I think the 22 year. So you then need to know as an individual, what tickles your fancy? What are you comfortable in investing in? Are you comfortable with your money tied up for 5 years or a year or 2 years? Or are you getting in to simply buy 1 year, and then do you have a view of if interest rates are coming down or if interest rates are going up? What view do you have? What would you like, to invest in? So that's basically it. Secondly, you need to factor in the macroeconomic risks of investing in bonds. Now, the simple way to put it is that when interest rates rise, what happens is that the value of bonds decrease. When interest rates go lower, the value of bonds increase. So depending on the environment you are at the time, what is happening, what do you think is going to happen, or what are the investors and analysts telling you is going to happen, you as an individual investor then need to take that into account. That are you buying to hold until maturity, or are you buying to sell? So those are the different things you then need to look at. The other thing is that to look at your portfolio diversity. What do you want bonds to do for you in your investment portfolio? You have savings, maybe stocks, and so forth. So what do you want, or what role do you want bonds to play in your portfolio? Do you want them to be, some sort of hedge or something you can fall back on? Because government bonds, to be specific, are very safe to invest in. You would then know that obviously the central bank or the government will not default on your bonds. But, with stocks, you are likely to lose money if, let's say, X company wakes up and, hey, it has gone down the drain. Then what do you do? What is in your basket to actually hedge, your riskier assets or your riskier investments? Bonds can actually do that for you, or government bonds, to be specific. Yeah. The last one probably would be to know your bond's rating. Now, the rating of a bond really speaks to the credit worthiness of where you bought the bond from, or the issuer of the bond. Credit ratings, you have Standard & Poor's, you have Fitch, you have Moody's. These are international bodies that do credit ratings for different countries or different companies on their bonds. So the highest rating you have is a AAA. And as Botswana, we have one of the highest ratings in Africa. So really investing in our government bonds is close to, zero risk. So I'm still out here pushing, the investors at home or the individuals at home and telling them that it's a pretty safe bet to invest in government bonds, looking at our sovereign credit rating and looking at where we're placed in Africa as well. Botswana has one of the highest credit ratings in Africa, being a triple B plus, as said or as released by the Standard & Poor's in 2021. So now this simply means that if you are to invest in Botswana government bonds, you're really investing in a low risk investment, which is good for you as an individual because you're looking at where the bond rating is linked to the creditworthiness of the issuer, being the Bank of Botswana.
This program was brought to you in association with First National Bank of Botswana.